So welcome everybody to Hedge Fund Secrets. So this one's going to be a really cool strategy, and what I'm going to do is I'm going to show you the highest probability trades that I know. And this trade, I didn't even know until a few years back. So before I start, I'm just going to go into a real basic risk disclaimer. But if you would, in the chat box, has anybody been to one of my presentations? Jonathan Rose with Active Day Trader. So I'll read the quick risk disclaimer, and then we'll get into it. Trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider investment objectives, level of experience, and ability to tolerate risk. So as we know, these are educational presentations. Whenever I talk about specific levels, it's just where I see value in the market. It's not a trade recommendation to any one person. All right. So I started Active Day Trader about 8 months ago. So it's nice. I got lots of no's. Okay. So let me do a little more formal introduction. Jonathan Rose. I've been trading for 18 years. So just to be clear from the start, guys, I'm not a marketer. Okay. I'm not a salesman. I'm a full-time professional trader. And then I also have a strict policy that I'm only going to teach trades that I've traded professionally and where I've made real money. So what does this mean? Well, a lot of topics that you see presented, you can Google and find lots of information. You don't need me for that. I can't add value if you can go Google how to do something. But where I can help you is sharing trades that I know work, and I know they work because they support my livelihood. So my core competency is going to be in options valuation, futures, specifically bond futures, and this trade that I'm going to share with you guys today. And the trade that I share with you today, you've never seen before. Okay? Pretty bold statement, but is anybody going to disagree that you've ever seen this specific trade? Because it's not often that we just get to see a fresh presentation, something that's really different. That's what you're going to experience in this presentation. So let me share a bit about my background so you can see how I'm different. So back in 1997, I moved to Chicago. I grew up in New Jersey to trade the day I graduated from college. I started in the business trading NASDAQ futures on the floor of the Chicago Mercantile Exchange. My first year trading, I made $1.5 million. I thought I was the man. In my mind, I was 23 years old, and I just made the kind of money I always dreamed about. I thought I was some gifted trader. But what I found out really quickly was I wasn't gifted. What I was just in the right place at the right time. So here's when I traded NASDAQ. The green rectangle shows the time period. Now the trade was amazing. It was volatile, and traders had real edge. During this time, every single trader on the floor in the NASDAQ pit was killing it, making big money, really, really big money. But things changed after my 5th year, because when the NASDAQ hit its low in 2003, volatility was sucked out of the market, and what once was so reliable was now impossible to make any money. For 4 years straight before that, I didn't have one losing week. Now, once volatility was low, I couldn't make money for 4 months straight, 5 months. There was no opportunity at all, so that's when it was time to make a change. And that's when I started trading bond futures. A friend from the floor had just started trading bonds, so I went to join him. On the left, the Fed raised rates 1% to 5.25%. That's exactly when I started trading bonds. It was really, really busy. And the overall message that I want to share is that good markets are 10 times easier to trade than bad markets. We always want to bounce around to go where that volatility is. At that time, I was trading so many fixed income contracts, the Mercantile Exchange was flying me all over to their best events. On the left, I got to play with the LPGA Tour pros, and on the right, Tiki Barber over at Baltusrol Country Club. But when the Fed was done moving in 2008, again, the trade really dried up. It went from being an awesome trade to just really, really slowing down. So that's when options were experiencing exponential growth. So I put 300,000 into an account, went to the floor of the CBOE to be an options market maker. It was here when I really fine-tuned my options game to be an expert at options valuation. But again, the major takeaway is that we need to be where the action is. We need to be in good trades, because in dead trades, even the best traders aren't going to make money. They're lucky if they break even. So here's what I'm about. And yeah, I've had a lot of success trading the markets. Now, I trade from home and I work with my clients throughout the day. My objective is for you to get better, because most don't succeed in trading because they learn the wrong stuff or they trade in the wrong market. And from what I've seen, it's a combination of these two different things. But here's the thing. I've helped so many learn and thrive in the trade. And what I realize is it's not your fault. It's not your fault if you're working your tail off only to learn the wrong stuff. The key to trading is learning trades that work, and then, only then, you'll see if you can really make money in that specific trade. So after that intro, here's what we're going to cover today. I'm going to show you how to identify trades that are grossly mispriced to their real value. And these trades require zero intraday management. Okay, they're all swing trades. They're all trades that you can put on, set it, and forget it. Okay? This is such a powerful strategy that I think everybody should have this, especially in the fourth quarter, because that's when these trades really present. It's also the highest probability trade that I've ever seen. Sound good? This is exciting, guys. So let me get into it. And again, this will be completely different than any other presentation that you've been to. My goal with this one is to blow you away. I got lucky to learn this trade, and I learned it from a very powerful man in the industry. And now I'm excited to share it with you today. And I can't wait to tell you exactly how I came about this strategy. At the end, I've got a big thank you for just inviting me to Investor Inspiration and allowing me to attend, or you guys attending, the presentation. Also, as you know, at the end, I'm going to share an incredible offer. This offer is meant to be an absolute no-brainer. The price, the value, the opportunity is designed for you to say, wow, I'm going to give this a shot. This sounds really, really cool. And it's all because 99% of you guys have never heard of me. I have 45 minutes to share my story, so that's why I structured the offer like I did. Okay? Let's start with some background, because this trade only makes sense if I share a story about exactly how I came across it. So after trading NASDAQ, I started trading from home and doing consulting work with various hedge funds in the area. A few years back, I was consulting for a family office in Chicago. Now, this office managed money for 3 separate wealthy families. And they hired me as a consultant to help raise additional funds because they had really good strategies, but they needed capital to grow. So I tapped into my 18 years experience, and with my contacts, I was able to set up a meeting with a really big prospect, or better yet, a whale of a prospect. I set up a meeting with a $7 billion family office from the Seattle area. Now, the possible introduction of a $7 billion family office to a smaller $50 million family office, that's a game changer, okay? If we can close them by convincing them to invest, it really would double the value of this $50 million family office, right? Because a $7 billion family office, they probably do investments in $25 million chunks or $50 million chunks. So I built a presentation that we would present to Seattle. The owner of the $50 million fund and I, we discussed our game plan. We practiced our pitch and we were ready to go. Now we had a fantastic product and we really knew our stuff. We were confident. So the two of us flew out to Seattle to try to land the dream client. I remember our approach as we were landing because for those that know, Seattle is such a beautiful city. You know, mountains and lakes as far as the eye could see. Our confidence was sky high. We went right to this guy's office. It was on the 40th floor of a magnificent building downtown. We went up to the office, walked in. There was high floor-to-ceiling windows that overlooked the entire city. I mean, it was absolutely breathtaking. Then we were ushered into a conference room. The conference room, long and oval, and on one side had a massive cascade of windows. Our escort pointed us to two chairs in the middle of the table, and we were on the side that was facing the windows, these incredible windows. We stood and waited for the decision maker to come in. When he finally came in, we met this perfectly dressed British gentleman. He went to his side of the table and sat down and waited for us to begin. Now, I don't usually get nervous at these things. My reaction is usually one of excitement, especially when I'm prepared like I was. But this was unlike any meeting I've been to. We were pitching a $7 billion fund. And to add, this amazing view was turning into one of beauty to one of intimidation. We were literally above the clouds. All I was thinking was, whoa, this guy's got some serious home court advantage. So we split our presentation across the table, and it was time to get down to business. This is the exact presentation that we used that day. We discussed the fund. He listened. He asked a few questions, but in the end, he just wasn't interested. We came all that way, and right there, it was a flat-out no, not interested. Ouch. We were just dejected. I was dejected. You guys know what 1% of 50 million is? $500,000. That's what I was hoping for if we could close this deal. So a major opportunity just slipped through our hands. Now, at the end of the meeting, the fund manager invited us to join him for dinner. And of course, we accepted. At dinner, we small talked, and then we got into what he didn't like about our offer. Unfortunately, the lockup terms wouldn't work with him, and we were too small for him to start battling over terms. But then he said he was impressed with our trading backgrounds. So he told us about a trade that he would invest in if we could build it. A trade that only a few are doing and that has really, really great edge. A trade that at times would allow us to buy gold for 10% less than what gold was trading at that day. And that's when he told us about the closed-end fund arbitrage trade. Closed-end fund arbitrage trade. I thought to myself, what's that? This guy wants us to trade mutual funds? Well, later that night, I researched and became intrigued. Now, literally, I stayed up all freaking night until I eventually understood enough that I could figure the rest of this strategy out through trial and error. So here's what I did. On the way home, I pitched the hedge fund manager, the $50 million hedge fund manager, by telling him, I can build this trade. And then he can go back to Seattle and try to get that business. After a few weeks of proving that I could do this, he gave me the go-ahead to start moving forward. I consulted for a year on this project, and I was paid $100,000 to develop the closed-end fund arbitrage trade for his fund. But since then, I've made over $500,000 in these trades easy. So that's the real value, not the $100,000. That's sweet, but it's the knowledge that I have for a lifetime, and that's exactly what I'm going to share with you guys today. As soon as I heard this perfectly dressed British man tell me about closed-end funds, I immediately went to imagine if. Imagine if I could find these trades and get some real big boy edge. Once I got over the fact that these were mutual funds, I was on my way. Imagine if you could find trades that were really 10% off what they should be trading. The first time you see these trades, think about what you would do. as you build confidence and you get to your 5th or 6th time trading these, how much bigger will you be able to trade? That's where my thinking was going. And as someone who does this for a living, once I got momentum, I knew I could figure this trade out, and I did. And the edge is amazing. What would that edge do for you guys? I know when I'm doing well, my wife can tell, my children can tell, and I'm just in a more positive mind frame. Imagine learning that a closed-end fund that only trades gold, that's right, 100% gold, is trading at a 15% discount to the value of gold. Pretty cool, right? So again, I'm going to show you how to identify trades that are grossly mispriced to their real value. These trades require zero intraday management. After the British powerhouse whale guy told me about this trade, a lot of things started to fall into place. I learned that Carl Icahn got his start in closed-end fund arbitrage. And it's probably not a coincidence that I learned about this trade from somebody who only gets pitched the best investments in the world. And then naturally I learned one of the greatest investors got his start doing these things as well. These comments are directly from the New York Times, talking about Carl Icahn's life, expanding into closed-end fund arbitrage. What about Benjamin Graham's book? Have you guys read this? The #1 investment book in the world says this about closed-end funds. Buying closed-end funds when they're trading at a substantial discount is almost always a great idea. I'm amazed that there are as many opportunities in this area as there are. See, as I started researching the power of this trade, it all started to make sense to me. So let's get into the training. First, closed-end funds trade just like stock, just like an ETF. There's absolutely no difference. If a closed-end fund's trading at $10 and you buy it, it's just like buying a stock for $10. So here's the NAV, the net asset value. If a fund has assets of 50 million, liabilities of 10, net asset value is going to be 40. So if we started a gold fund, all of us together, 126 people on here, we start a gold fund. We buy $100 worth of gold. The NAV is $100, right? Let's take a management fee because we have to get paid for setting up a fund. So let's take 2% for a management fee, okay? The NAV is $100. But the gold fund is now $98 because we took our $2 management fee. So right now, if this example was a closed-end fund, it would be trading at a 2% discount. The NAV's 100. We bought $100 worth of gold. We took out 2% for our management fee. So the fund is trading at 98 and the NAV's trading at 100, a 2% discount. This is key in understanding closed-end funds. ETFs, we know ETFs, right? An open-end fund is just a mutual fund. Vanguard, call, buy a mutual fund. When you call Vanguard and buy a mutual fund, they're going to issue new shares. That's how that works. Okay? So here's the difference between these three. They're very closely related. Closed-end, the NAV is reported every day. Open-end, the NAV's reported every day. ETFs, the NAV's reported real time. Closed-end funds, the market price does not equal the NAV, right? Our gold example, $98, but the value of the NAV was 100. Open-end fund, the market price always equals the NAV. It's the same thing because the fund is issuing those shares. ETF, the market price always equals the NAV, or it's within pennies of the NAV, because that's what automated trading is really doing. They're crushing the ETF market, and they're doing an arbitrage between the market price and the NAV. Okay? That's why those stay really close. Closed-end fund, the market provides liquidity. It trades just like stock. Open-end, the fund, because they issue shares and buy back shares. ETF, the market provides liquidity, right? We can buy an ETF. Here's really Edge, and this is why this trade works. Closed-end fund, the overall market size is $300 billion. Seems like a big number, but it's really small. Open-end fund, $13 trillion, ETF, $3 trillion. Why that matters to us is because $300 billion, it's too small for institutions to really participate. Because if they have to do a $50 million trade, the market's just not big enough for institutions, so it's dominated by retail traders. Retail traders are probably trading these without really understanding how to trade them, and that's why we could have Edge. Here's an example. This one's called the Central Fund of Canada. Symbol is CEF. The NAV, 1507. The share price, $14.11. 6% discount. The average is a 7% discount for the year. But look down here. Once in a while, trades present that are really, really reliable. And this is what we're looking for. We're looking that the NAV is 1123 and the share price is trading at a 13% discount to the NAV. It averages a 7% discount, so that's probably where it's comfortable living or trading. But once in a while, because of just supply and demand, it trades at a 13% discount, and that's exactly what we're looking for. 3 secrets to the closed-end fund trade. 1, by far the highest probability trades that I know when they present. 0 intraday babysitting. I only need 1 of these trades to make this strategy an absolute no-brainer. Starting with the first one, these trades are the highest probability setups I know. Listen, when I'm trading options, futures or whatever, I'm always screaming from the rooftops to my members to be patient, to be disciplined. Let's wait for really good entry points. And then once you get those entry points, then relax. Let the market do what it's going to do. All we can do as traders is put ourselves in the best position to succeed, and then let the odds take care of themselves. We control the price that we're willing to pay, not the market. If you have discipline, there's not a better setup that I know that's more reliable. So here's an example, and let's dig into that CEF example. On the left here, this is CEF, the same one I did before. What this fund holds, 59% gold bullion, 40% silver bullion, 1% British pound. Now, the price of gold bullion, we know, right? Gold bullion, it's the same whether you're trading it in, US, Europe, India, wherever. It's gold bullion. There's a currency difference between the different places, but we know the price of spot gold bullion. We know the price of silver gold bullion. This fund has very little management fees, right? Let's dig deeper. 52-week low is 13%. On the right here is a chart of the premium and discount. So you can see going back 3 years, it lives like at -6%, okay? -6% to the NAV. Can you guys see this? Is this making sense? So the 52-week average is 7%. Now and you can see here the average, 6-7%. Awesome. Okay. Yes. Seeing a bunch of people understanding this. So what this is showing here on the right, the stock, the one that's traded like an ETF that you can just buy and sell like any other stock, is trading at an average of 6% discount to its net asset value. But once in a while, look at this, it gets to be a 12% discount. You can see here the 52-week low is a 13% discount. And that's what we're looking for. We don't want to do any trades right here. This is what I call no man's land. when it does present like this is really, really good trades, okay? Here's a chart. Let's look at the chart and those trades. This is on the right here and here, same exact chart, sorry. Same exact chart, right? So here's what I want to show you. I circled the different points in this closed-end fund of when it presented a 12% discount, a 13% discount. And you can see, if you're patient, if you don't trade in no man's land, and if you wait till these really, really present, there's not a more high probability trade than I know. And listen, there's about 500 closed-end funds. On this chart of this one closed-end fund, I'm showing you 3 trades that are awesome. Absolute no-brainers. But you have to be disciplined, and you have to wait for these things to set up. If you want to trade when it's at an 8% discount, this is not a good strategy for you. You don't have the discipline to use this strategy. What we're looking to do is patiently wait until the really, really good stuff presents, and then we want to get in, okay? And maybe that's 2 trades a month, 3 trades a month, okay? But that's okay. It's all about return on capital. Just taking a sip of water. The first time that I got to see these, I was blown away. Okay, I told you a little bit of background about how I found out about this strategy. This is not something you can Google. You can't Google closed-end fund arbitrage. Okay? You can Google a lot of stuff, and I've seen a lot of presentations. Fibonacci, Gann, technical analysis, all great. What I want you to do is I want you to dig deeper, because when these special trades present, then use your technical analysis as the icing on the cake. Use that to manage your trades, but let's be in the right trades, okay? We work too hard for our capital not to be in high probability trades. 2, these don't require any intraday babysitting. Let's go through another example. This one is called HQH, the Tekla Healthcare Investor Fund. Okay, if we look here, current trading a 1% premium. It averages a minus 1%, but once in a while it dips down to negative 11%. Negative 11% under its net asset value, under its holding. So think about it. It owns a basket of stocks. Let's say it owns 10 stocks. Let's say it owns 1 stock. It owns Apple. Apple's trading at, I don't know, 110. Well, if we can buy Apple for 105 when it's trading at 110, that's probably a pretty good do, right? That's what we're looking for. You can see the holdings of the fund. Pretty plain vanilla, nothing too crazy. David, great question. David says, what caused the 52-week low? Retail investors. These are retail driven. People don't know how to trade these. It's the same reason why I just said that nobody's ever heard of this strategy. Okay? I have presented this to my members. Nobody's heard of this strategy. That's why. So it's going to, once in a while, trade off value because it's retail driven. Let's look at the chart of HQH. There you go. Patience. Both these trades, if you have the patience to wait, we put it on our radar, and when they present, then we get in. Okay? Don't rush. Don't trade in that no man's land. Okay? And this is the difference, because think about it from a technician standpoint. What happens if something presented where you wanted to sell HQH because, I don't know, it was above the cloud, or you saw a reason to get short? And then you realize, you go to this presentation, like, darn, I just sold something that was at a 12% discount to where it should be trading. You kick yourself, right? because that would be money that you lost that you didn't need to lose. That's why that can never happen with this trade. It can never really happen if we're disciplined and we wait around. I only need one good trade to make this strategy an absolute no-brainer. I'm going to walk you through my best trade of 2015 when I was designing this fund for that family office. And when I designed the fund, we raised $1 million, just so that's part of designing a fund. You trade it during its beta phase. And this is a trade that I had my best results with in 2015. U.S. and Cuba reopen long-closed embassies. As a professional trader, when I see news like this, I want to see how I can make some money. Okay? Capital is going to be moving around. How can we really make some money? Cuba. That's a good place to look. Cuba stock. When this happens, Cuba went from 7 all the way up to 15. But there's one thing with this trade. There's no Cuba in Cuba. That's crazy. Straight from the SEC website. Cuba is a closed-end fund. When we brought in relations or reopened relations with Cuba, CUBA shoots up 100%. But there's no Cuba investment. I know this. At that time, Cuba traded a 50% premium over its net asset value. I was short 50,000 shares between 11 and 16. Why? Because I knew exactly what stocks were in Cuba, and I knew that I was trading 50% or 100% over the value of those stocks. What's my risk? Not too much, right? I killed this trade. You know who killed this trade? The owner of Cuba, the Cuba fund manager, straight from the SEC. My man buys $2 million of his own fund. Then the announcement comes out and he sells $2 million of his own fund for $1.8 million. I was furious when I saw this. My mother loves to trade. What happens if she bought Cuba at $12 because she wanted to capitalize on the Cuban investment? It's not fair. It should be illegal, but it's not. Herb Greenberg. You guys know Herb Greenberg? Herb Greenberg is somebody who's investigative reporter, CNBC. I wrote him an email trying to get it on CNBC because I knew how ridiculous it was. Herb replies, all good points. It never makes sense to buy into closed-end funds at a premium, but people do. It's not a bad story. He was too busy, but definitely thinking the right way. I wanted to share this because it shows the confidence that I can have in these kind of trades. Are you guys seeing it? Different, right? Fresh? All this stuff is pretty exciting. I'm only presenting on trades that I've done and that I've made money with. Trading with technicals is great. It's the icing on the cake. We do need to dig deeper in trades and then after manage those trades with technicals. So how would you guys like to implement this in your trading? How would you like to be able to find trades like this and have the confidence that I was showing you here? It's all about discipline and waiting around for the few times a month when these trades really present. Renee, we started like 5 minutes late. Is it okay if I just use 10 minutes just to go over? I'm getting the pull, but we started a little bit late, so just give me 1 second here. Awesome. Okay. So before I get into the investment, I want to share a story of one of my clients, okay? Because most of you have never been to one of my presentations. Stacy reached out to me October 31st, 2015. And I remember his email so well because this was right around the time I started Active Day Trader, and I had a difficult time expressing exactly what I was looking to accomplish with ADT. And that's because I'm not a marketer. I've only traded. And I remember this email because Stacy put into words exactly what I was thinking and what I wanted my clients to come away with when they work with me. I wanted my clients to be self-sufficient. I want them to be able to use this information independently. So to make a long story short, almost a year later, in one of my advanced bond rooms, Stacy writes, I've had very, very few losers and have paid for this service many times over. So here's what you're going to get. And we call it Hedge Fund Secrets because this can't be Googled. You'll learn how to scan and find these trades. Free scanner. And then you'll learn the important facts about discounts and premiums. Again, I got paid $100 grand to build this for a hedge fund, and it took me a full year to execute properly. This is the exact information that I'm going to share with you. This product easily has a value of over $5,000, and again, you can't Google this. I'm not asking for $5K. If you were a hedge fund, I could and would charge you way more. But let me ask a few questions. If all this investment did was show you one good trade, one really high probability trade every month, would it be worth it? If all it did was expose you to a brand new approach, or if it protects you in one asset class. If you want to buy gold and you find a closed-end fund that's trading at a 10% discount and you can buy gold through the closed-end fund, that's a great trade. If it showed you one trade a year, would it be worth it then? Tony Robbins says the easiest and fastest way to build wealth is asymmetrical returns. Now, what does this mean? Use your capital when you see an opportunity where the risk is grossly outweighed by the potential return. That's why I priced this like I did, because it's priced to be a no-brainer. It's priced to be a big thank you for joining me today. So think about what you guys would value this training at. Think about where you would say, heck yeah, without a doubt, I'm in. It's fresh, it's different, I've never heard of it, but you know what? You presented it, and this price, it's an absolute no-brainer. Before I add the price, in addition to the on-demand workshop that's yours to watch immediately, I'm adding a live class so we can all scan together and hunt down these trades, and of course, all your questions can be addressed. It's this Thursday, 7 p.m. Eastern Time. So now what you're going to get, an 80-minute on-demand video, yours to watch immediately, and then a live class this Thursday. It's going to be recorded, sent out to everybody. Finally, like you, I never thought I was going to be trading these things. I get it, they're not sexy. It's not what we envisioned when we started trading, but this is the good stuff. I also have a personal rule. When a well-dressed British man who manages a $7 billion fund tells me what to trade, I have a strict policy that I don't ask questions, I just listen. So now, you guys are in front of a special opportunity, and the timing couldn't be better because the fourth quarter is the best time for this kind of trade. So let's talk about the investment. Here's the price for everyone besides you. But since I want you to get comfortable with me, for today only, I'm offering this program at a massive discount. A trade that you can never learn anywhere else besides right here, right now. We're going to do a one-time investment, an 80-minute video, and a class this Thursday that you get the recording, watch it as many times as you want. Just to be clear, guys, I'm not a super gifted trader. I'm not blessed with better feel than you. I do this for a living. I do want to put something in front of you that you've never seen before, and I do want you to get to know me, so I thought this would be a great way to say, hey, I'm going to show you something very, very fair, something you can't learn anywhere else, and that'll be a great way to start building our relationship together. So For those interested, for those know that this feels just cool, activedaytrader.com/fund. Active Day Trader, and there's an E after active. Bad spelling on my part. Active Day Trader, ACTIVE, daytrader.com/fund, $147, yours to watch immediately. Again, about a minute and a half, 80-minute class, easily a $5,000 value. Live class this Thursday, 6 o'clock Eastern Time. It's yours. Watch it as many times as you want. On the class, we'll go over the workshop, and then we'll just play around and scan, and we'll find these. This is all about patiently waiting for really, really special trades to present. For those interested, activedaytrader.com/fund. And these last 30 seconds or so, if there's any questions, or if not, you can always email me directly at jonathan@activedaytrader.com.